So good afternoon. Welcome to our webinar today. And the topic, as you can see there, is how do I research and analyze a share? So the big question is, how do you know if a share is cheap or expensive? A common method of analyzing a share is by studying its price to earnings or PE ratio. If a share has a high PE, investors are willing to pay a higher price compared to today's earnings. If the share has a lower PE, you get more earnings for your investment. But you can also use charts or technical analysis to complement your fundamental analysis. By combining the two strategies, on the one hand, obviously fundamentals, and the other hand, technicals, you'll better understand the market and gauge the direction in which your share portfolio is going. And that is my objective today with this presentation, just to highlight for you, and I'm trying to strike a balance between being, on the one hand, being not complicated or complex, but also on the other hand, not having it too basic or too simple. But my whole goal today is for you to understand the process, how to go about analyzing a share. And obviously, because of time constraints, I can't go into too much detail. I can refer you to other webinars and other resources. But to get going into the nitty-gritties, this is my agenda. Whoops, sorry, wrong button. Okay, my agenda very quickly is to just to touch on some basics, the process of analyzing a share, and then we're going to use some examples of fundamentals. And I've just chosen 3 companies. And please, here's my disclaimer: this is not a tip. These are not a share suggestion. Don't rush out and go buy these companies. They're just for educational purposes. So I'm going to touch on the fundamentals on Supergroup, Metropolitan, Momentum, as well as the tech property. Okay, and then we're going to also touch on the technicals. Sorry, let me just get some water. So, how do you analyze a share? The idea here, and it's also important to understand, very few people go about investing with clarity of mind, okay, and an action plan. So the whole idea is share analysis is a process, and I'm going to touch on it a bit later in more detail just now. It doesn't matter whether you're an investor looking for growth or value stocks or value shares. The first step in thinking like an analyst is to develop a probing mind, a curious mind like a child. Okay, ask questions, why, as I would say. You need to find out what to buy and when to sell, and obviously at what price. So the analyst would focus on one particular industry or sector, and then within that particular sector, focus on select some companies, and then they'll dig a bit deeper and probe the affairs of that company on that watch list of theirs. And the idea is that they're going to look at things like financial statements and other available information, and we'll be talking about that too, about the company. But bottom line, your goal is to gradually be in a situation where you connect the dots to get a full picture of the company. Of the company. But also, saying what I said just now, it's always better to research several shares in the same industry, and you'll see we do some peer analysis, a comparative analysis in this presentation, so to get a better idea of the company. So the idea here is, yes, we're going to talk about research and things like that, and a lot of you guys will think, okay, there's shortcuts. I'm sorry, there's no shortcuts if you want to be a successful investor or analyst. So your biggest constraint in becoming your own share analyst is time. So I'm talking about 3 companies today, and this is the idea. So take 3 companies, go through them today very quickly, but understand the process. The more experience and time you have, obviously, the more shares you can put under your right onto your watch list and under your lens as such. So start where you are right now. For those of you that are complete novices, I know I do also have more advanced investors here, but when you start looking over analyst reports, and we were touching on that also in this presentation, start with your own analysis. And I'm going to be talking about referring you to the company's website also, because there's a lot of information there too. So you get a holistic picture of the company. But you don't just blindly follow, for example, our research or our analysis. Okay, the research analysis put out there, it gives you a quick overview, obviously, of the company's strengths and weaknesses, who's the main competitors, the industry outlook, and also obviously the future prospects. But always, and this is something I've learned over the years, always look for the reasons while reading analyst reports. Ask yourself this question. What would your opinion have been about the companies you're looking at with the same information? Okay, what would your analysis been with looking at the company, and how does it differ? Okay, so let's go into a bit more detail. And those of you who've been on my presentation before, you must probably have seen the slide. I've used it many times. Very broadly speaking, I always use the analogy of having a magic wand. If I had a magic wand, what kind of shares would I like to buy into or to investigate? So from a fundamental point of view, I'm looking for companies that are quality, undervalued, that are profitable shares, while also they're trending up. In other words, in a bullish trend from a technical point of view, a long term. But in the short term, they've pulled back a bit, so they're at the bottom of the cycle, they're oversold. But also over the longer term, there's institutional support. In other words, the institutions, the pension funds, the clever money is buying into the company, and there's that support or confidence, and we see that through what we call volume accumulation. So this is very broadly what this presentation is all about today. Okay, so how do you analyze a company? As I mentioned just now, some analysts will use a top-down strategy where they start with the industry and then locate a company, a winning company within that industry. Or some analysts will look at what we call a bottom-up approach. They start with a particular company and then learn more about the outlook of the industry. So you need to decide for yourself which way you like to do it. You'll see in this presentation a bit of both. But there's certain questions or steps you need to go through. I've got basically 6 steps here. You ask yourself, you do yourself what I call an industry analysis. And the whole idea here is to get an overview of the industry, as well as obviously you want to go into an industry that has a growth outlook. You don't want to go into an industry that's stagnating or there's no outlook for its growth outlook. So the main idea also when you're looking at the industry is who are the major and minor competitors to this company that you're analyzing. Okay, very, very important. We're looking at the business model. Again, all this information you get through the company's financials also, and I'll talk about that on the next slide. When you're looking at the company's business model, we talk about the strengths and weaknesses of the company, and more specifically referring to the company's unique brand identity, its products, its customers, its suppliers, and things like that. When it comes to the financial strength, and this is where it comes down to the nitty-gritty, you have to understand the numbers, understand the financial statements of the company. We talk about the company's balance sheet. I still refer to the old way of looking at it, old way of calling it. I call it still a balance sheet, the income statement, and the cash flow statement. But bottom line, you can look at various financial ratios to determine, on the one hand, the company's health, and also, as I said just now, its growth prospects. And then also very, very importantly is to look at the management quality. You know, it's a critical factor when you're looking at a company. We've seen it also with lots of companies going to the wall right now. You know, there are no good or bad companies. Okay, only good or bad managers. Okay, let that sink in a bit. So the key executives of the company are responsible for the future of the company. So when you look at the company's financials, go dig a bit deeper and look at who's the board of directors. Look at their track record. What's their background? How long they've been in the company? And things like that. It gives you a bit more insight into the company. We look at growth analysis. You know, share prices follow earnings. So what's important to understand is know where those future earnings are heading. And obviously, there's no quick formula. But basically, as I said just now, you want to basically connect what has happened in the past, connecting the dots, to what's expected to happen in the future. And that is basically your goal as when you're analyzing these companies, to see where are we going. Okay, and then the last step there, I like to what we call looking at valuations, know what the company's worth. We looked at the company's future earnings potential. Then we have to also look at what the company's worth. And that's what we call, and there's no correct value. We talk about what's in the company's intrinsic value. So as a value investor, we look at intrinsic value, where if you're a growth investor, you're looking at earnings potential. But a company selling on a higher PE ratio must grow at a higher price to justify its current price for growth investors. So what we call a market rating. But we're obviously more contrarian. We look at more value investors. We're looking at companies with a lower PE. Okay, so bottom line, your ultimate goal as an investor is to make a profit. Okay, but you have to be a good analyst to try and find those companies that do that. Okay, so this will help you improve your analytical skills. Okay, so first things first, what I suggest you do is go to any company that you're interested in. Go to the webs, go to the internet, and go look up the company on the internet. And here, for example, I'm looking at Super Group, and go look for this on the company's financials. Look for either a sector called investors or financials. By the way, if you click on here, it will take you to the company's financials on Super Group. But there's a lot of information here. And yeah, this is a little quote that I've come up with many times myself. The more you know about an industry or sector or share, the better. Basically, you bring the odds in your favor. Okay. I always say to people, you make money from the business you're in or the industry that you're in, the work you do, because you understand it. You'll make money on the stock market once you understand it. Okay, same thing, yeah, same principle. But going a bit deeper, this is what Super Group's financials look at. This is their latest financials. Again, as I say, if you click on there, that was the end of June. There's a lot of additional information here that might not be in a company's analyst report. Okay, so you want to combine the two together. But to simplify it also for you guys, those of you that are shareholders, or not shareholders, account holders with us, so equity account holders, once you've logged in, you can click on Research Hub. You'll come up with what we call fundamental recommendations. You can see there's various quants you can look at, best quants large cap, best quants small caps, undervalued quality stocks. So anything over here, all the shares are green here. You can see on the PEG ratios. This is investing for dividends. These are two different strategies. What I want to focus on today is this little section here, latest reports, research, because this is the latest updated company analysis. And I want to combine the two together. Okay, so let's dig a bit deeper. As I say, I want to look at the fundamentals of Super Group, etc. Sorry, let me just grab some more water. So if you look at our company analysis on Super Group, there'll be 14 pages. There's 14 pages. Yes, very similar information you'll see on the company's website and the company's report. They might just say differently here, so it makes it easier to understand and vice versa. But what I like about this, and this using Super Group, for example, there were 14 different sections that they cover, and I want to highlight the recommendation and all three shares I'm talking about, the peer comparison, and in this example, the qualitative summary, which I find very interesting. So on Super Group, what's important is you'll see in the financials, if I go back 2 little graphs here, it's hidden away here, okay. You'll come across in the investment idea, this little image of a triangle. And bottom line, all you want is, you can see it's green, it's good, white to be neutral, red to be poor, and then obviously the black is the actual share. And the ideal share you want to buy into is when this graph makes a perfect triangle. And the closer into the green, the better. Okay, so on this situation with Super Group, our recommendation was that the share was trading on a forward PE of 17.19 times, and the analysts feel that the share offers value and would recommend overweight exposure. So first of all, what is a forward PE? Some of you might have heard of a regular PE, or what they call a historical PE. All it is the current share price divided by the earnings per share. The forward PE is just the current price again, but divided by the predicted earnings per share. Okay, so that's what we're talking about. But bottom line, the lower the PE, the better. So yeah, you can see there's three elements to this triangle. Obviously, value, that's the most important, and I'll be talking about it now. Yes, we're using PE ratio as a mechanism to value a share, but also to understand there's a quote from Warren Buffett, and I like to use it quite often when it comes to this, is price is what you pay, value is what you get. So also understand that investment is not only based on value, but quality as well. And the reason why we bring in this quality, if I bring in my cursor here quickly, this quality rating, we talk about we're not only looking for a fair company at a great price. We're looking for a great company at a fair price. Okay, so companies may be cheap for a reason. So yes, the share price has fallen and the PE might be very low. You think, okay, it's an opportunity. We call that sometimes a bull trap, because next week the share will be cheaper as the share price falls. Okay, so what's important to understand that poor quality companies should trade at discounts to their companies. But when we talk about this quality rating, how do we get to it? It's an attempt to quantify specific financial ratios, and obviously our analysts do it on your behalf. For the financial ratios of a company to result in what we call a quality rating. Now, for this purpose, we look at the following ratios. Obviously, return on equity, ROE, returns on tangible net asset value. We look at operating margins. We look at things like cash flow per share, as well as dividends and interest cover. All those kind of ratios then get calculated, and obviously we look at ways of weighting them, and then they're marked out of 100. The higher the value, indicates a better quality company, if that makes sense to you guys. Okay. By the way, I suggest you go click on this little link here. It will take you to a webinar we did. It's a very short webinar that explains how to read this and also how to interpret our trade ideas or investment ideas, the document. Okay, so I'm not going to go into too much detail today because it's all done for you already here. When we talk about the confidence score, okay, this attempts to quantify the forecast risk in the valuation. Okay, so we look at various things like obviously the financial structure, as I mentioned just now. We look at the credit health of the company. We look at the stability of reported earnings. We look at what they call dispersion of valuations. In other words, we look at the consensus from all the other analysts, okay, and we look at their target price. So one analyst might have a target price of 10 Rand, and another one might have a target price of 100 Rand. That big disparity obviously highlights a lot of uncertainty. You want those target prices to be close together. Okay. You also look at things like the risk in dividend cuts. Now, when the company cuts its dividends, we as shareholders don't like that because obviously that's our income. So we'll look at things like that, the risk to dividend cuts. These ratios, again, also weighted out of 100, and then the higher value indicates higher confidence in the valuation. So again, what I want to highlight for you, a perfect triangle would be the ideal share that you want to buy into. Okay, I hope that makes sense to you guys. Okay. Okay. So we're looking at what we call the peer comparison. This is again from the company analysis, the peer comparison of Supergroup relative to its peers. You can see it's very cheap. This is a 12-month forward PE, 17.19. I mentioned just now, very cheap relative to its peers. Okay, and when we talk about its peers, we talk about obviously this is what's it called? Motus Holdings, Bidvest, Imperial Holdings, and Imbala World. Okay, so that's very, very briefly the ways you'd look at it from a fundamental point of view. And I've touched on it very, very briefly. Obviously, goes into more analysis in the report, but that's how you look at it. You look at those 14 sections I was talking about, but digging a bit deeper. I just wanted to highlight for this what you find interesting. And then on Supergroup, I found this was very interesting, this qualitative summary. So it's basically looking at the positives and negatives that can affect Supergroup. Okay, so we look at things like company-specific factors, and we're looking at the market factors, and we look at macroeconomic factors. I find this was very, very useful for if I'm looking at investing into Supergroup. And the idea is to maybe do the same thing for yourself when you're looking at companies. What's the pros and cons? What are the factors affecting the company? Okay, so let's look at oh, sorry, I forgot to mention this. By the way, as I said, the reason why I'm not going into too much detail, because on our website, before logging in, okay, scroll right down to the bottom, you'll find there's like a section, like a black section far on the left, on the right-hand side, you'll find a section there called social media. Click on social media, takes you through to our YouTube channel. And all these companies will have a very short video on them, on the financials. And this, for example, was Supergroup. Okay, again, you can click over here to take you, you'll be able to find it on our website. Okay, so it's very short, about 4 or 5 minutes. Written, it's presented by the person that did the report, goes into more details. So that's an additional tool for you to understand the company. Okay, so let's look at the Momentum Metropolitan. Again, I suggest you guys look at the company's website. Again, you can highlight the, go to the website and go look at the financials there. This shows you what our analyst reports look like. And again, as I say, on the report, that's where you get this little icon, this image I was talking about just now. Okay, so what is Momentum Metropolitan? Obviously a financial services company. And the reason why I've chosen, because it's a different way of looking at a financial services company. There's different financial ratios you'll be using. But bottom line, what do they do? Some of you might not know that Momentum Metropolitan, they're involved in long-term insurance, asset management, investment, healthcare administration, as well as employee benefits. That's what basically they do. Okay, but it's a different way of valuing it, and I'll go into more detail just now. So looking at their guidance as such, also we suggest overweight, and when I mean by overweight is basically a buy signal. Okay, we recommend a buy. Again, I suggest you go look at this video. It goes into more detail, the interpretation of this. But you can see it's not too perfect. We go a bit more into the white here. So based on quality, we're a bit more neutral. But confidence and on value, we're still okay on that on that company. So from a valuation point of view, we believe that the company is trading at a 32% discount to its embedded value, EV value. As I say, it's a different way of analyzing it, especially to insurance companies. So embedded value basically. Embedded value of a life insurance company is the present value of future profits plus the adjusted net asset value. Okay, I'm not going to go into too much detail. By the way, on our website, on our tutorials, there's a whole tutorial on analyzing financial companies. But this is the way insurance companies are valued, using embedded value. Okay, sometimes we use net asset value for industrial companies, etc., or price earnings ratios. But we use embedded value for insurance companies. So we feel that this company, MTM, still holds value because it's trading at the price to embedded value is at 0.68, well below its long-term average of 1.04 times. So again, we believe there's opportunity here. It's undervalued. Price to embedded value, as I say, it's undervalued, and we believe there's the opportunity to dig a bit deeper. And again, you can click on this little link here. It takes you to a recording of the analyst report on this company. Okay, talk about Intec. Now, the reason why I chose Intec, apart from being on our on that company analysis list, PSG recently, well, August, moved to Waterfall Park here in Midrand, and everything is managed by Intec. Now, what I like about Intec is that, again, it's still in neutral, but that triangle's getting better. It's a better form, put it that way. Again, our recommendation is overweight. This is relative to the property sector. So relative to all other property shares, you'll see this now. We believe that this is a better opportunity. It is undervalued. It's trading at a 44% discount to its net NAV. So remember, it's a property company now. Okay, so NAV is a different way of analyzing it. So we recommend overweight exposure. When we talk about the house view guidance, by the way, this is just, remember, it's indicative only for guidance. But every investor's circumstances is different. You might want to go overweight. You want to be a bit more underweight to that sector. But this is what I like about it. Yes, it's as I say, it's undervalued. But look at this here. The anticipated growth in its dividends. It's expected to grow by 15%. And being sitting here in Waterfall Park, looking out a window right now, I just see a lot of cranes and I see a lot of construction going on. So there's a lot of potential. Yeah, that's what I like about this company. So that's on my watch list, and I think there's opportunity. Okay. So let's look quickly at the technicals. And again, what I've done here is very simplified. I'm using what we call Viewpoint. Those of you that are on our website, there's a facility where you can subscribe to a bit more advanced technical analysis as opposed to the investor. It's called Viewpoint. Yes, there's a subscription, it's 230 Rand a month, but it's much more advanced than the investor. What I like about this is that you can save templates and it's all online. You have to worry about downloading any files. And also, I can chop and change. Worst case scenario, I'll go down to 15-minute delayed prices. But you can also have live prices if you want to. Yes, there's additional cost there. It's 99 Rand a month. But what I've done here, and this is a very simple process, what I've done here is just look at the long-term view. I'm using a 50-day and a 200-day moving average. And I've gone down to only 6 months. Okay, so this is showing you the last on a 6-month period. And I've drawn in the support trend line. It's quite a reliable trend line. It's bouncing off there right now. This I did this morning, first thing before the market opened. And I've drawn in what they call Fibonacci retracement. So you can see also a resistance level. That'll be my price target short term. Okay, if you want to buy in over here, that'll be my target there. It needs to break out above it. So we move out of this sideways market. But you can also see that retracement levels, it highlights that on average, we're pulling back into this blue area at the moment. Which is around about the 61% on the Fibonacci retracement. So that, yes, we're trading just below the 200-day moving average. It's still, okay, that was bullish. We haven't crossed, so I would still say this is still long-term bullish. Okay, but I believe that we're at the bottom of the cycle, and you see on the next slide when we bring into same share on Supergroup. Now bring in MACD. MACD stands for moving average convergence divergence. It's an oscillator. I like to use MACD because it works well in both markets, a trending market as well as a sideways trendless market. But bottom line is below zero line. It's an oversold territory. It's not giving me a clear buy signal yet, but it does confirm that we're near the bottom of the cycle. Yes, there are, in the viewpoint, there are a lot of other technical indicators. There's more than 50 other indicators you can use, RSI, stochastic, you name it. They're all available. I've just tried to simplify it here for you to highlight for you that it's oversold right now. And the third step I like to do is bring in what I call volume analysis, confirm where the institutions are. So this is what we call on-balance volume. It's a running total of volume, the number of shares traded, whereas the bottom one, we talk about price volume trends. So it looks at percentage move. But this long-term trend, it shows me that the price might have fallen, but the volume, there hasn't been really been a sell-off from the institutional side. They're holding on. Okay, so that gives me confirmation that gives me more confidence in the institutions still holding on, and that just confirms price action. Okay, so very similar with momentum, Metropolitan. I've just drawn from a prominent low to a prominent high. Again, touched once, touched twice, 3 times. Not too reliable trend line. You can see there, that's the previous resistance trend line. Resistance there will become support here. So we had a very important turning point. You can see it's also touching its 200-day moving average. So I believe this is crucial support level. I don't think we'll break through this, but I anticipate a bounce from this level. You can also see based on the Fibonacci, we're in this little area here, again, very close to the 61% retracement. Again, I anticipate the bounce. How do I know that? You can see on the MACD indicator, we're oversold. Again, anticipate the bounce. Okay. So they're betting the odds in your favor. So we've got a very good, a high probability of the share bouncing up. Okay. And volume accumulation over the long term, you can still see it's volume accumulation. There hasn't really been a big sell-off. Yes, we had a big spike here, and you can see the price dropped a bit, but there hasn't really been a sell-off since then. This is making a bit of what I call a flat triangle. I anticipate a breakout above it and going a bit higher. Okay, and we always talk about buy low, sell high. Yeah, we talk about buy high, sell high, yeah. Okay, and then lastly, Intec, making a bit of a triangle pattern here. It's what we call a continuation pattern. to break out and go up a bit higher. So it needs to break up above this resistance trend line. You see again also touched once, touched twice, touching 3 times here, bouncing off its 200-day moving average. So again, very crucial turning point, but I anticipate a breakout up. Okay, and that's confirmed again with the MACD indicator trading below at 0 line in oversold territory, a higher probability of turning around and bouncing up. Okay, and again, volume accumulation or confirming these all together. Okay, so just quickly, guys, I know coming out of running out of time. Just quickly summary, and this I think is an important slide. On the one side, you've got the fundamental analysis used. I suggest look at the company's website because there's additional information there, especially about the industry and its management, apart from the financials. Okay, look at the company's financial website, the company's website. On our website, remember we're looking at the research hub, breaking right down to the latest research. On that latest research, you find the company analysis and then look at their recommendation. Okay, so this will be the shortcut. Look at this first, and then go look at the company's website. Okay, on the technical side, basically what I look at is trend analysis. I want to look at moving averages, use trend lines and support lines, support and resistance trend lines as a tool. Okay, but also use moving average crossovers to indicate a long-term trend. And then the MACD helps you to understand the short term. Where are we at the bottom of the cycle, etc.? Are we oversold? And the volume analysis confirms price action, but also, I believe, looking at where the institutions are. So just in case your fundamentals and technicals are wrong, it's important to have portfolio risk management. So I always talk about the 3 S's, the structure of your portfolio, what kind of stocks you have in your portfolio. Are you looking at top 40? Bottom line, you look at quality stocks. That's what's important. Quality, top 40, quality mid caps, and you might want to be looking at small caps. And small caps is different kettle of fish. We're looking at more cash flow, looking at interest cover, because there's different kind of risk there. We talk about the spread, how many shares you got in your portfolio. You want to have too little, then you have to analyze all your eggs in one basket. Too many, then you have to do more analysis, spend time analyzing it. Good spread is between 8 and 12 shares, but spreading it between 3 and 5 different sectors. Don't have all your shares in the gold sector, for example. Okay, diversify. And then remember, this is mainly for investment purposes. So you're using more diversification to manage risk, but some of you might consider using a stop loss or what we call contingent orders. I use that initially when I first buy the share, but then also when a company becomes overvalued, I might put a 20% stop loss in. That's why I've got a question mark there. So it's up to you on your strategy, but that's how you would analyze a company. Okay. So before we take questions, so let me just go back one slide quickly. I want to highlight this quote here for you. This is from Phil Fisher. It says, the stock market is full of individuals who know the price of everything, but the value of nothing. The reason why I put that quote in is that a lot of us will do the analysis of the company, but then, sorry, let me just get my notes here. What do I remember what I wrote here? Maybe you want to know what you want to buy, when you want to buy, when you want to sell. But the whole idea is if you're investing without any education or research, you're going to make some terrible investment decisions. So research is much more than just listening to popular opinion. Okay, so that's a quote from Phil Fisher. And then there's a quote here from Benjamin Graham, which was one of Warren Buffett's lecturers at school, professors at varsity. So the individual investor should act consistently as an investor and not as a speculator. So if you haven't got an equity account of us yet, in conclusion, I suggest please register, go open up a share trading account. You can have access to that research platform or at Research Hub. And then if you want to combine the two together, I suggest look at Viewpoint. Yeah, and then we take it from there. Let me just see what kind of questions you have. Cool. Wow, lots of questions. Okay. Dion, I'm not 100% sure. Yeah, Dion, the current links in the we're talking about this presentation, and I'm talking about the recordings of the company analysis done by the analyst of the company. But you'll see it either when I send you the link, you'll be able to pick it up from the PDF. You can dig a bit deeper. Okay. Good question here from Leon Jabert. So how does the EMA, the exponential moving average, differ from the simple moving average or the weighted moving average? Okay, obviously, simple moving averages, this says that, for example, a 5-day moving average, 5 days ago share price is the same as having the same impact as yesterday's share price, which I don't really feel the same. I believe that yesterday's share price has more impact or has a bigger say on the impact of today's share price. So it's the same with a weighted moving average. I prefer to have a weighting for the most recent prices as opposed to 5 days ago. So exponential moving average and a weighted moving average is what I would prefer. It's a bit more sensitive to what's happening with prices right now. You'll see that it hugs the price closer than a simple moving average. But to answer your question, the main thing is that I like to use a EMA because it uses exponential, multiplies the current share price by exponent and gives it the current share price, the most recent prices, more weighting as the older prices. I hope that makes sense to you, Dion. Okay, sorry, Leon. Frankie says, I find that macroeconomics, Brexit, trade wars, stagnant economy wreaks havoc on my analysis. I perform these days. Very frustrating. Yep, I can understand that. So you have definitely a top-down approach to the market. So you look at what's happening in the macros and then honing down to specific industries and sectors and shares. Okay? Yeah, I can understand. That can be frustrating. Maybe start looking at a bottom-up approach. Go find the shares that offering value, offering or quality, and then look at the peers and then look at the industry. Maybe that could be a different way of looking at it also, Frankie. There's a question from Jan. It says, if I want to sell a share and I don't own one, what do I need to do with this? How do I do this transaction? In other words, you're a bear. Unfortunately, you won't be able to do it with a normal shared account. Only way you'll be able to do that is through a derivative account, like a single stock futures account or a CFD account. You in South Africa, we can't do it with a normal equity account. It's what we call bear selling, and bear selling is illegal. Whereas with derivatives, you can go long and short. So you sell something you short off. You do that in the derivatives. Okay, Jan, I hope that helps you. If you want more information, drop me an email or give me a call and I'll explain the process to you. Okay. How can I see historical research reports for individual companies? Daniel, the best source would be the company's website. You'll see that they'll go back a few years there. That'll be your best source of information. Cool. That clock has all the questions, guys. Well, thanks a lot. Appreciate that. Cool. So just to wrap it up quickly, from my side, this webinar recording and the presentation will hopefully be sent out very soon, hopefully by the latest by tomorrow morning. But from my side, thanks for being on this webinar. Thanks for your participation. Good luck and happy investing. Bye for now.